everybody? Uneducated Economist here. Let's get some dice up here. You know, I enjoy making these videos, and I really love diving into this information, coming up with these theories, explaining it out here on the internet, and really like feeling that when we have this conversation, we are really coming up with what it is that we need to do for ourselves to make the best decisions for ourselves. And it just blows me away when I find like so many articles, so many people, so many misunderstandings that are taking place within the economy, within the Federal Reserve's monetary policy, like the awareness of monetary policy. Nobody's getting it right. Like literally, like nobody seems to be getting it. And now after a while, I feel, man, am I the one who has lost my mind? Am I the one who was crazy here? I mean, I see the documents, I see the words, I got the speeches, and yet nobody seems to be addressing some of the issues, some of the major issues that was taking place within the Federal Reserve's meetings, statements, what it is that they were planning on doing for policy. Like, how many times have I said it on this channel that the adjustment of interest rates is no longer the effective tool? And that by lowering interest rates, you are not going to stimulate the economy like we once had. We had run into the lower bound of zero. This is something that I say in just about every single video. But yet there's still people out there who are confused by why we are experiencing some of the things we are experiencing within the economy. And one of these people seems to be Bostic, right? Who is a Fed official. Where is he at? The Philadelphia Fed or something? Where is Bostic? Bostic is Atlanta Fed. That's right. He's from the Atlanta Fed, right? And it's interesting to listen to some of the quotes. Like, I'm not really big into mainstream media articles to get the facts, right? This is what they want people to understand and know about the economy so that they can conduct their monetary policy. Reading these things is more understandable. Now, I have already been of the impression that by lowering interest rates and stimulating the economy is not the effective tool for creating inflation. We have experienced this since the great financial crisis. Now, this is not even to be argued or anything like that. Quantitative easing 1, 2, 3, and 4 failed to produce the inflationary scenario that the Federal Reserve was looking for. Everybody, including myself, was well aware of the situation creating hyperinflation going into the future, but that did not happen. Very different from what everybody was expecting, including me. Excuse me, guys. Okay, so Bostic, here we go. We got Atlanta Fed Bostic talking about how the employment is very confusing. Let me see if I thought it. Let me see, where is he talking about it here? Okay. It might be hard for somebody to buy a shoe. Sorry, the screen refreshed and it went right back to the top of the page. But I wanted to get this one quote out of this article. Come on, stop bouncing around. All right. Now, in there, he says let me see here, talking about the unemployment. And this, okay, before I guess I get into that part of it, the article refers back to the 2% target so many times. Now, we know from this channel, and I've said it many times, and I've gone through all the information that they are not going for a 2% target. But right off the bat, this is how most people are missing the information. This is how they are conducting the monetary policy, is to understand that this article right off the bat says this: when asked if the Fed would be willing to go through a small recession if it meant reaching the 2% target, Bostic said the Fed's price stability goal is what's most important. So this article leads you right into believing that Bostic is of the mind of having a 2% target, even if it requires a little tiny recession in order to get it. No. Not even close. The Federal Reserve does not look at that 2% target. To even suggest it is inaccurate. Right? To even suggest it. And now, if you are going to internalize the rest of the information here, you are going to be internalizing it with the 2% target in mind and how it is that the Federal Reserve is going to be conducting themselves. It's It doesn't exist. It simply does not exist, the 2% target. It is a 2% average inflation rate over time, and we say that in every single video that I do. All right, let's see. What does he go on to say here? Let's see. I thought and had hoped that there would be a rate cut earlier, right? Talking about at the end of the year, right? Why lower rates if you don't have all the data? Because you are sure that you don't want to raise them. Now this is another economist talking about the Federal Reserve, and this is where a lot of people think that it is where the Federal Reserve seems to be stuck in this idea that if they lower rates at some point, that might create an inflationary scenario, and then they'd have to raise them again. And this is what everybody is fearing. I don't believe the Federal Reserve is thinking that way. This is the mindset of the mainstream out there. That's not the mindset of the Federal Reserve. The Federal Reserve believes that it would be a grave mistake to cut too early. But they don't feel it to be a grave mistake to cut too late. They know it'll cause pain and misery, right? They said that it would cause pain to households and businesses, but that it would be a grave mistake to cut too early. See, again, this is how most people are misunderstanding the Federal Reserve. They have clearly gotten the message that there is a 2% target, and they don't want to cut too early because if that creates an inflationary scenario, they would have to raise rates. That narrative is completely inaccurate. That is not what the Federal Reserve is going for, right? Let me see. Where is the spot where he's talking about unemployment? Hold on. Let's see. I go to the store just like everybody else. I face the same. Okay, no, he doesn't. Where is that spot? Sorry, guys. I should have had this a little bit more geared up and highlighted. Okay. Oh, man. This is a terrible video for this. Okay. You guys are going to have to go read the whole article for yourself. All right. Okay, here we go. This is it. Okay, historically, this is really where I think like a lot of people are missing it, because once you have created a situation in which that the inflationary pressures should present themselves. Okay, so what is that environment look like to create the inflationary scenario that the Federal Reserve would typically try to provide to the economy? Okay, so the Federal Reserve is in charge of the financial system. So the only thing that they can really do is lower rates or raise rates. They lower rates and people get the impression, okay, if they lower rates, this is going to spark consumers, right? They're going to go out there, they're going to buy houses, cars, and go on vacation. Very true. Like, this is not something to be argued. This is part of it. But the more deeper issue, right? Because a lot of people think that's what's causing inflation. It's not, right? The Federal Reserve sees it much differently. And the Federal Reserve has talked about this in many times, that if you lower the interest rates, what you are going to do is spark the consumers, yes, but you're also going to spark business investment. And this is important to understand, because when businesses start to invest, they're going to buy equipment, buildings, hire people, right? And that hiring people is really where the inflationary pressures come from, right? Yes, the consumer is part of it, having a more demand capabilities by lowering interest rates. Yes, you do and spark the consumer, but what you're really doing is creating employment. You're getting those businesses out there to invest into their companies, and part of that is getting the hiring on, right? And this is very common for the Federal Reserve to experience. It's called part of it's called the Phillips Curve, right? So anyway, we're not going to go too deep into it. We're just going to discuss it like that. This is what Bostic has to say. Listen. Okay, so historically, we're going to talk about it a little bit, and then we'll go to the quote. Historically, when interest rates go up, so does unemployment. But for a while, an unusual thing is happening in the economy. Despite rate hikes, hiring was still strong. Bostic says this, quote, "This has been one of the most unusual economic periods in my lifetime. I never really seen anything like this." Boom. It's because interest rates don't matter, bro. You know that, right? But the Fed can't communicate that. If the monetary policy was communicated out there to the people in a way that says, hey, interest rates don't work anymore, they don't affect the economy like they once had. We lowered interest rates to zero. We had zero interest rate policy for a while. All this zero interest rates should have created an inflationary scenario within the economy, and it failed. It failed the Federal Reserve. Quantitative easing, 1, 2, 3, 4, failed to produce the inflationary scenario the Fed was looking for. It's because monetary policy had come to an end. Interest rate adjustments were no longer working. It's so important to understand this because now it's forward guidance. Forward guidance is the monetary policy coming from the Federal Reserve. And when you have forward guidance being presented with lies, straight up lies, this is a lie because the Federal Reserve, Mr. Bostic of the Atlanta Fed, knows damn well that they are not going for a 2% target, but going for a 2% average inflation rate over time, and does not correct it or clarify that, and allows everybody, including the author of this and everybody who reads it, right? This is coming out of the Atlanta Journal-Constitution, the AJC. And everybody who is reading this is going to be allowed to think that a 2% target is in mind, and that a Fed official here has seen it as one of the most unusual situations. What did he call it again? The most unusual times? How did he say it? How did he say that again? Of course, now I can't find it. It took me forever to find it the first time. Anyway, he said it was the most unusual times in his lifetime. This has been one of the most unusual economic periods in my lifetime. I've never really seen anything like this. Yeah, but you understand what's happening. I mean, you've seen the speeches, Mr. Bostic. You've listened to Michelle Bowman talk about it. I mean, if nothing else, why don't you just go and listen to the Uneducated Economist? There was a video that I did, let's see here. When did I put this video out? Saying it was like 6 months ago. 6 months ago. Listen, here's some of the things that was being said 6 months ago. Let me see if I can go back and find it here.
Kid,
oh, these YouTubers and their damn commercials. I swear.
It's brilliant.org.
All right, here we go.
Communication practices with balance sheet policies supported by forward guidance. Right? This is them telling you exactly what it is that they plan on doing in order to get you to behave in a way that as if they had already conducted business. And this forward guidance totally worked for them too. And we can expand onto that in a different video.
Right.
The forward guidance refers to the commitment by the central bank on the future path of its policy. The FOMC, which is the Federal Open Market Committee, if people are wondering on that, they're the 12 voting members who vote on monetary policy. The FOMC issued its first long-run goals and policy strategy in 2002 and subsequently amended it in 2019. That statement included the Fed's first explicit commitment to an inflation rate of 2%, as measured by the annual change in the price index for personal consumption expenditures. That strategy is often referred to as flexible inflation targeting. All right, here it comes. The changing U.S. economy. The Fed's most recent 2019 through 2020 review of its monetary policy framework, strategy, policy tools, and communication practices was motivated by growing awareness of structural transformations of the economy, including diminished sensitivity of inflation to resource slack. Now, this is something very interesting to think about because back then they were having very, very difficult time finding the 2% inflation that they were looking for. And they knew that it was an issue even after all the quantitative easing.
Right?
All right.
They lowered it. They knew there was insensitivity to their monetary policy from their actions. They lowered interest rates to zero. They had all this historically low unemployment, which would typically fire off the inflationary scenario that they would have expected from their monetary policy, and it didn't work. It didn't work. They knew that they had to come up with something different. That's where the forward guidance comes in, right? And understanding that forward guidance is the main policy tool of the Federal Reserve, there is no way that they are going to be shocking the markets with their actions. That's not how forward guidance works. Remember, we have talked about forward guidance from the Ben Bernanke speech given back in 2002, where they talked about deflation and how to prevent it from ever occurring here. And once you have run out of all the capable tools that you had at the time, which is basically interest rate adjustments and asset purchases, you're going to be running into the only thing you have left, and that is your credible threat. The credible threat to do something. We will cut rates in September. Or not, or maybe. And what happens if you are in a possible, could be, looks like we are, don't really know? How much actual capabilities do you have within your knowledge of determining the Federal Reserve's outcome if they have not clearly defined it to you? See, leaving it open-ended is part of the monetary policy tool. They were able to stimulate the economy. Think about what's going on with mortgage market. Like right here, hold on. Let me see if I can just find one real quick. I'll just Google it. Mortgage rates falling. All right. So we're just going to do a quick Google search just to see, what news stories come up. All right. Very first one, applications to refinance home loans jump as mortgage rates drop. That was in the last 5 hours. Next, I'm not going to even read the articles. I'm just going to read the headlines. All right. That was on CNBC. What do we got here? Market Watch. Mortgage rates fall for a second week in a row and refinances soar 117%. Why? What did the Federal Reserve do that's different? Nothing. Nothing has changed. The Federal Reserve is sitting on their hands, and the only thing that has changed is the people's perception of what it is that's going on in the future. Here, let me see if I can find another one. This is what's going on with mortgage rates right now. Let's see. Mortgage rates down ahead of key inflation data. That was 3 days ago. Mortgage rates fall to a new 1 week low 2 days ago. How mortgage rates could fall further. Why mortgage rates will probably keep falling before the Fed cuts rates, right? Is because the forward guidance has been presented so well. Let me see here. Fed rate increase. Biggest winners and losers of the Fed interest rates decision. Okay. Opinion. Interest rate cuts are coming, but won't do much. Next one. When will interest rates go down? There's nothing. There is nothing talking about interest rates going up. Not a single article, right? Okay. Here we go. Let's try this one. Let's try neutral interest rate. Let's see if we can find anybody out there in the news. All right, Bloomberg. Oh, Bloomberg has one. Okay, cool. The Fed neutral rate is a fantasy. Oh, they don't even believe it. Okay. The Fed steers interest rates on path towards neutral. Right now, the Fed believes the neutral interest rate is 2.5, a lot lower than the 5.5 currently. When was this given? June. Okay. So there's a couple of people who are talking about it. So here we go. What is the neutral interest rate and why is it the focus? Well, let's see what they have to say in here. Who is this? The World Economic Forum. Perfect. Who better yet? Yeah, more propaganda. Okay. With the World Economic Forum's latest chief economist outlook saying policymakers face persistent headwinds, continued volatility, and slow global economic activity, central banks around the world are grappling to find appropriate policy settings. On top of that, they are seeking the neutral or natural rate of interest, the exclusive rate at which the economy operates at full employment and capacity and steady rate of inflation. It is the rate at which the economy is neither stimulated nor slowed down. All right. The neutral interest rate has long been a topic of debate and blog posts. right? Like, why is this something of debate? It's probably because nobody knows exactly where it's at, right? All right. It's not a direct observable figure. Yeah, here we go. And comes from informed estimates. It also depends on various factors that are up for debate, including GDP growth, future growth, demographics, and other variables that challenge over time. That's why there's a range of estimates among economists. You won't find the neutral rate quoted on your computer screen or its financial section of the newspaper. Former Dallas Fed President Arbor S. Kaplan wrote in a blog post, "The neutral rate is an inferred rate. That is, it is an estimated based on various analysis and observations." Boom, right? There's no way of looking at the neutral interest rate and observing exactly what it is, and therefore, since nobody can put their head around it or mind on it or actually put their finger on it, they just don't believe it exists. Like, how many economists out there bring it up? Hardly any, right? And this is the unfortunate consequences that we end up living in when we just have no idea of what it is that the Federal Reserve is truly doing out there. We end up being stuck at the misguided beliefs of most of the mainstream media out there. It's so incorrect. Gold is, what is that? Ludicrously manipulated. Yeah, Brody, it sure is. But, I mean, I look at it as like, a gift in either way. Like, if you hold gold, gold's doing quite well now considering what it's done in the past. And if you're holding silver, then you're having actual great opportunity to load up on even more considering how undervalued it is. I look at precious metals as there's no lose on that one, especially dollar cost averaging into it. Let's cruise up here. Buying gold and silver using a loan so I can simultaneously add to the money supply and decrease the amount of outstanding precious metal to accelerate the wealth gap between the rich and the poor. Great day, everyone. Hey, what's happening, all-nighter? All right. Simon, you're right. Rates are a thing of the past to a certain extent, and that's why government's going to have to step in with RICO, both criminal and civil act, and cut housing prices by force. I don't think so. You're destroying your own theories here. Luther, you wouldn't have any clue about my theories anyway. You contradict every single thing I've ever said because you're nothing more than a troll who comes here just to give us a hard time, man. You're not accepting it, I never contradict anything I say. And I'm not going to read your comments anymore. If you want me to read your comments, you're going to have to pay for it. Super chat it, man. Peter Schiff podcast coming tonight. I agree with you on silver, Simon, but I think it's an insurance policy, not a get-rich-quick investment. I totally agree. But, I mean, that's why I look at it as an investment, more of an investment, because really, or not an investment, but the insurance, I mean, it is an investment, but if you look at it as far as the insurance policy, you don't worry about where the price goes with it. And that's why it's awesome for that insurance policy, because you have something away from the third party, but then also from the investment side of things, not the insurance, but the investment side of it is there's very low downside risk, right? See, that's the harshest part about putting your money towards something is watching it go down. And at least with silver, it's so undervalued that the idea of it going down is pretty minimal. The idea of it going up is huge, right? So the reasonings to buy it are one, but then, the insurance behind it and the confidence behind it is a whole other, two different things. All right, the Fed was selling stocks and bonds to prop up the market. Seems the Dallas Fed guys was getting rich from using the Fed funds. The Fed can't buy stocks. That's illegal. All right, the Fed doesn't do that. And when people say that they do, I don't understand how it is that they are saying this, except if you are going about the roundabout way of it, in which that they are essentially financing banks who then go and buy stocks, and therefore you can say, hey, they're financing the banks in a particular way to support the stock market. Okay, like, that's, I guess in a roundabout way, yeah, that would be the case, but then that would be the case for every single thing that the Federal Reserve is attached to, right down to our very job. So, like, no, I mean, I don't believe the Federal Reserve is buying stocks. They do buy bonds in the treasuries, right, as far as treasury bonds, but they don't buy corporate debt. That would also be illegal. They can't do that. But again, they can lend money to the big banks, who will then go and put those things on their balance sheet, who do have legal authority to do that things, but the Federal Reserve does not. Now, if we want to talk about the time in the past in which that they had the legal authority to do it, it was an unusual and exigent circumstance. It's called Fed 13.3. Did I get that right? Yeah, 13.3, in which that they have, in conjunction with the Treasury, the ability to set up a special purpose vehicle, which is an entity separated from them because they can't legally do it, right? So they set up this special purpose vehicle, and that can buy stocks and bonds or whatever. Like, they can have this entity out there that does have the authority, but it's unusual and exigent circumstances that are needed, and the Treasury would have to be in approving of this. And none of that situation is taking place right now. Here, what time is it? What's something that I found very interesting? I don't want to go off on all this stuff. You guys are awesome. I'm glad you're all here. We got 283 people with 85 thumbs up. They do it all the time through the Exchange Stabilization Fund. Okay. Weird how this week it's monkeypox scare. What happened to bird flu? It's like it disappeared. Yeah, it's because it runs its course. They can't use it anymore. Yeah. Witchcraft controlling the banks of the rivers of energy converted into what called money. Buying nothing will help in the future. Simon, read that comment. Didn't expect him to. Take a second to hit the like button. Yeah, please do. Yeah. Monday, it's International Emotional Orangutan Day. These people are putting it in your face. Monkeypox. Now, see, like, it's so, like, it's so obvious to me, some of the things that are happening, that are out there. It's so, like, to me, it's apparent because of, like, how it is that they said that their monetary policy would need to go, and then you watch it actually unfolding, and then people, like, fall right into it. They fall, like, right into like, almost like the trap, you know and it's like, it's like I call it out. I said, hey, if they put out this information that suggests, and it's a credible threat, like they suggest that there will be lowering interest rates into the future, people will act accordingly to that. And here it is. They are doing that exact thing. And it was obvious to me. I was like, hey, I called this out. I said that they were going to do this. I put videos out saying that the Fed has effed your mind. It's all about a psyops game. It's the biggest gaslighting in history. And I explain it time and time again. And I put it out there, and we see it. We see it take place. Like, you can't describe exactly how it was going to go down. You don't know what the words they're going to use, but they say it straight up. Like, here it is. And then people miss it. Like, I don't know. Like, how is it that the Federal Reserve came out at the end of last year with the dot plot map that said we are going to be lowering rates into the future? But that is not what they said. It's what the markets heard. Then mortgage demand started ramping up. Interest rates started to fall. And as time went on, the Federal Reserve backed off on all that statement, saying, hey, we might have to wait, data dependent. Months and months and months goes by, and everybody forgot about how they said that they were going to be cutting interest rates back at the end of last year. Everybody forgets about that. And then they repeat it. They do it again. Boom, here. We're going to have rate cuts going into the future. Everybody believes it. You get articles talking about a 2% target. All these people get misunderstood about what's happening. They start to take action believing that there's going to be rate cuts going into the future, and it actually has the stimulating effect, and the Federal Reserve has to go and say, well, things look a little better than we thought that they were going to be. The unemployment hasn't risen significantly. Inflation is coming down, but hasn't quite, met to our goal. Right, because their goal is not a 2% target, it's an average inflation rate over time, which means that there's going to be appropriate monetary policy would have them conducting themselves with inflation moderately above 2%, very much like where we're at. And so if it was going to be like real interest rate cuts in September, they would communicate that. They would say, we are going to cut. That's the forward guidance. That's the monetary policy. Not the interest rate cut. The policy is their words. And if they say we are going to cut in September, but we don't know if it's going to be a quarter or a half, we don't know exactly by how much, but we are going to cut, then the markets would start pricing it in. Markets are pricing in the idea of a rate cut, but they haven't fully priced in an absolute rate cut because they haven't been committed to that yet with an absolute number of this is what it's going to be. There is still the suggestion, the risk that they won't cut, and that is also priced in. The moment that the Fed commits to it, we are going to cut, then the markets will price in all that rate cutting that they are going to do, that they have made the announcement for. They will price it in, whether it's a quarter or half. That information will also be priced into it. And so when the Fed does come to September and they make that rate change, nothing happens. Nothing occurs. The day before and the day after will be exactly the same. There will be no changes to the markets, the market perception, their decision making. All that will have already occurred. That is how the Federal Reserve conducts themselves. It's very important to understand that they are not going to shock the markets with a rate cut. No, that's not the way they do it. They do it with their words, and they do it far ahead of time. That's how come I can be so persistent with the idea that they are not going to be cutting in September. I am going against the narrative because they don't understand, and they are not incorporating average inflation rate over time, and they are not incorporating the credible threat theory, the forward guidance. Neither one of those things occur within any of these articles out there. But that is the main policy tool coming from the Federal Reserve. I can't explain. I explain it every single day, but when I see these articles like this exact one, and then even Bostic himself, this has been one of the most unusual economic periods in my lifetime. I've never really seen anything like this. Oh, really? You never seen it where your interest rate adjustments no longer work? Well, that's okay. You can go back and read Ben Bernanke's speech and follow the Uneducated Economist, because he's been explaining how those interest rate adjustments aren't working for you, and he's been doing it for years, coming up with the theories and ideas on how it is that you are conducting yourself through articles exactly like this one. So you're doing a great job, right? Because you have two communications that you're doing. I'm talking to Bostic. This one, the one that's being put out there for the mainstream media and everybody out there in the audience to read and focus in and be delivered the information, so because it's force-fed into them. And then you got information like this, which says something totally different. Huh? So which one are you going to believe? Are you going to believe this propagandized information that's coming out where he's, very unusual, never seen anything like this, this is so weird? Well, it shouldn't be that weird, bro. I mean, if the Uneducated Economist doesn't find it weird because he's been talking about it for months and years now, then you shouldn't be finding it weird either, right? I mean, that shouldn't be taking place. It should be very well understood what it is that you have going on here, but yet he says, unusual economic periods in my lifetime, never seen anything like this. Weird. So weird. Yeah? No, it's not. It's not weird, right? It's exactly the way you wanted it. It's come down to forward guidance, which is the main policy tool, and interest rate adjustments don't work, because if they did, then lowering them to zero and having historically low unemployment would have created the inflationary scenario that you were looking for, but that didn't work. Weird. Most unusual economic times, isn't it? I mean, this has only been going on for how many years now? I mean, we're going on, 14 years, 16 years? This shouldn't be surprising. This is well orchestrated. This is well designed. This is well played. And nobody, and it's because of articles just like this, nobody sees it. It's so amazing to me. And I mean, like, I just don't get it how some dude in a, old 99 Ford Explorer reading through all these monetary policy speeches is the only one seemingly talking about this. And the only time that you ever hear anything about the neutral interest rate is coming from the World Economic Forum, and they're not talking about it in the form of the monetary policy and how it is that they need to conduct themselves around the idea of a neutral interest rate, and that stimulating the economy with the interest rate drops isn't going to work. But yet the belief, the idea, the understanding, and the well-communicated 2% target belief, along with the Federal Reserve dropping interest rates, definitely has the markets participating in the economy in the way that the Federal Reserve would expect them to, even though they didn't do anything with rate adjustments. Nothing. All right? We're the only ones. And, and that's what's kind of, like, I repeat myself over and over again on this stuff, but yet I still find people who are coming to me saying, dude, I'm starting to get it. It's starting to click. I'm finally you're breaking through. And I'm like, right on. And if there's people who have understood it and they get it and they think that I'm just repeating myself over and over again, go find somebody who doesn't know this information and turn them on to the channel, right? I don't know what else to say. We need to get this out there to the people. We need to get this information out there because this is the way that you can conduct yourself that is going to be the most appropriate to the Federal Reserve's monetary policy itself. Right? If everybody knew this information, if everybody was to follow the uneducated economist, internalize this information, be able to recognize the BS that comes through in articles just like this, then their monetary policy would fail. It wouldn't work anymore. And that's what's scary about this whole thing, is that because everybody has now fallen into their trap, into the communication forward guidance trap, it's working for them. I mean, it totally works. If you don't believe it, just look at the evidence of it right now. Look at all the I gotta go, don't I? Yeah, I gotta get going, guys. I'm sorry. I just sat here and just kept blabbing on. All right, the Fed didn't twist the markets. It's the markets twisting what the Fed says. That's why the market priced in 4 rate cuts, and we haven't had one yet. Bam, bro. That's exactly what I'm saying. The Federal Reserve's communication twisted the markets, right? The market's twisting what the Fed says. They're not twisting what the Fed says. The Fed is communicating this on purpose like this. I mean, it's not like Bostic came out and says, hey, you know how you said that it's a 2% target? You might want to change that around to a 2% average inflation rate over time, and that appropriate monetary policy would seek to achieve inflation that's moderately above 2%. That's what it really should say. But he didn't correct that. Nope, he said, nope, weird, unusual economic times. Never seen anything like this in my lifetime. So weird. So weird. It's not weird. It's played out. Alrighty, guys, you're awesome. Well put, whoever wrote that comment. Who wrote the comment? The world is a mystery, Babylon, and the harlot is running the show. A manipulating woman speaks and steers it through her words. Yep. Alrighty. They're weird. They are weird. Okay, guys. I hope you enjoyed it. I left a link down in the description. Left a video to, the Fed effed your mind. Go and check that out. It's a YouTube video that I had put out like 6-7 months ago. And the information in that video is so good, right? It's kind of hard to internalize, I mean, it's complicated stuff, and it's stuff that nobody else is talking about, so it's hard to get it. But it's an 11-minute video, really good information inside of there. Links are down in the description of it. Links are in the description of this video. Let's get this stuff out there for people to understand so that they can make the best decisions for themselves, because what's going on inside of here, I'm going to leave you guys with one more thing, because you're also awesome for sticking it out, 309 of you. I work a retail job in the lumber industry. Right now, building is slowed down so much, dramatically. In fact, it's the worst in housing starts. If I remember right, it's the worst in housing starts since May of 2020, which was like the height, the peak of the lockdowns, right? So here right now, we are experiencing a retail environment that is exactly the same as the peak of the lockdowns. I have just about as many customers coming in as I did then. But we don't have anything going on in the economy that would create that situation, not like lockdowns. But yet that's what we are experiencing within the store right now. This morning we had, I think, 3 customers in the first hour, right? Now there is moments and times in which that it does get busy, but it's not like it was. And when you think about that, the starts on housing is the same as it was at the peak of the lockdowns. That's scary as hell. And there's nothing going on, right? Nothing going on that would cause that to happen except for people's perception of what's happening within the economy. Scary times, guys. All right, uneducated economist, you let me know.